Hi, welcome to the video. And on Tuesday, Tesla gained 19.64%, ending up at $673.58 on market close. And after market, it is actually up to $689. Tuesday's rally was the highest close in a week and largest one-day percentage advance since February 3rd of 2020, and it added $106.1 billion to the company's market value, its largest one-day market cap gain on record. In this video, we're going to talk about what happened, why did it shoot up so much in one day, and what's to come. Before I get into the specific reasons, I want to address a lot of my comments on my pro-bullish Tesla videos saying this isn't going to age well, I'm going to come back to this when Tesla drops to 200. This would be a great opportunity to say I told you so, but I'm not going to say it because, like I kept reiterating, fluctuation of this market price should not be why you are investing into a stock long term. My reason for investing in Tesla is because of its underlying technologies, its future sales, all things that remain unchanged regardless of whether or not today's price has shot up 20% or tomorrow it drops back down 20%. And unless something fundamental about the company has changed, my conviction on Tesla stock will remain unchanged. So again, market fluctuations, which I believe are going to continue to happen, is not proof of anything. It's not proof of anybody being right about this stock, because this is a growth stock, and the period of seeing whether a growth stock pays off has to be measured in years. It cannot be measured in weeks or months. But I'm going to get off my little soapbox and let's talk about what happened in the main catalyst, which is China car sales data. The China Passenger Car Association said electric vehicle sales in February rose more than sevenfold from a year ago, while falling 38% from January. Tesla sold 18,318 Shanghai-made Model 3s and Model Ys in February, up 8% increase from 15,484 sold in January. While consumer activity slowed last month during Lunar New Year holiday, Wall Street was bullish on Tesla's monthly gains. Quote, "We believe price cuts and the Model Y introduction were key to some of these changing market dynamics in China," Weed Bull analyst Daniel Ives said in a note to clients. Daniel Ives is a very respected analyst. He is a Tesla bull. Quote, "That said, overall EV demand in the region looks robust, with EV penetration set to go from 4.5% in China for 2020 to 10% by 2022 in this EV arms race with Tesla and its giga footprint and center." Teslarati says this is incredibly impressive, especially considering that February is a 28-day month, and it also accounted for 7 days of Lunar Festival Chinese New Year. Those are times when Asian countries like China essentially shut down to spend times with their families to celebrate. It's not a time period where people are out doing business or selling stuff. Companies like Tesla are required to take a mandatory break for the nationwide celebrations during this period, which meant that Giga Shanghai was only in operation for just 20 days. Essentially, they produced 23,632 Model 3s and Model Ys in about 21 days. Now, this was the main catalyst. Cathie Woods is also about to release a new price target regarding Tesla. She's written a full report and blog post, so that's going to be another catalyst that's going to boost up the stock price. Because people know about it, I'm assuming that that's also getting priced in. Other analysts have also started to raise their price targets. But back to China, China is really a key part of their strategy and success this year. Tesla is, quote, "on track to be on a 200,000 plus unit sales trajectory in China for the year, which remains a linchpin for the company, hitting its 750,000 to 800,000 annual numbers for the year." This accounts for almost a quarter of their sales in all of the US, and they are able to do it because of Gigafactory Shanghai. But what's more exciting is how they're incorporating the local Chinese talent into developing their cars. And there's the upcoming $25,000 car, which is highly speculated, but it's rumored to be testing and released at some point. And what's really cool about this $25,000 car that's designed for the Chinese by local designers hired by Tesla, the vehicle will not only be sold within the country. Instead, this $25,000 car will be exported similar to the Model 3 and Y, two vehicles currently in production in Gigafactory Shanghai. Quote, "We want to design, develop, and produce an original model in China, manufactured here and sold to the world Tesla China President Tom Zhu said. The Shanghai Gigafactory was not at full capacity until very, very recently, and they're doing their best to make it fully, truly vertically integrated, where every part of the car can be made within China. And we can see, all of this investment is finally paying off. Being able to make 20,000 cars in February is no small feat, and it's only going to ramp up from here. The 800,000 number of vehicles produced target would be nearly double the 500,000 they produced last year, and I believe it's only going to continue to grow. I think that's actually a fairly conservative estimate. Elon does not want to take the risk of over-promising and undershooting, but he definitely wouldn't mind under-promising and over-delivering. I think 1 million is definitely in their targets, and it's only going to keep growing very, very fast from there. Now, what do I think Tesla is going to do? Have we found a support around the $560 mark? Honestly, I'm still not sure. I believe that the majority or a lot of this price fluctuation is due to their earlier purchase of Bitcoin. It's still something a lot of large institutional investors are still trying to process. And even Tesla itself is a company that a lot of institutional investors still have not accepted. There is so much fear, uncertainty, and doubt in the whole market. And I'm not blaming anyone, because honestly, to understand what Tesla does requires actually sitting down and diving deep into watching Elon talk, into going through what their companies are actually making. It takes a lot of time, and I would say a majority of retail investors simply have a life and don't have the time to truly understand what Tesla is doing. When it comes to institutional investors though, and their analysts, I would say a lot of their analysts are just stuck too much in the past. They are using old models to try to judge what Tesla is, and they're just unable to accurately evaluate the value of Tesla. And anytime you are comparing something new and revolutionary to something in the past, you are probably going to miss the boat in understanding its true potential. In the short term, I believe Tesla price will still be very, very volatile. So even though it came up 20% today, I don't think it's impossible that it would drop back down to the 500s. Personally, I don't think that's going to happen. I wouldn't be surprised if that happened. With Tesla, there's always an overreaction. So if NASDAQ were to drop 3%, Tesla would probably drop 6%. If growth companies as a whole are dropping, Tesla is going to experience it even more, because there's a lot of feelings and strong opinions about Tesla. I think a lot of the institutions actually only invested in Tesla because it joined the S&P 500. They weren't willing participants. They added Tesla when it was already at a $500 billion market cap. That's pretty late to be adding a company into it. So there's still going to be a lot of volatility around Tesla. As hard as Tesla is to understand, it's even harder to understand Bitcoin. So the fact that their fates are now tied together, remember Tesla invested $1.5 billion into Bitcoin, which at the time was over 5% of their cash position, which is substantial. And if you follow Bitcoin at all, finding a stable price is pretty hard at the moment. Do I think it's still overpriced right now? Personally, no, I do not. I bought when it was at its top in the 800s and all the way down into the 500s, because I think Tesla has already planted the seeds. They are on track to be selling more and more vehicles every single year. Once full self-driving beta is also released, their competitive advantage in the market is going to be more and more clear. Cybertruck is also on the horizon. We saw that it had reached 900 at some point. We know that it's going to hit there again. It's just a matter of time. How long it's going to take to get back up to 900, how much of its actual future growth has been priced into the stock, it's hard to say, but I think 600 is a solid price. Again, I bought all the way up at 890. There are a lot of other competitors coming out of the woodwork and releasing their cars, and they're doing a lot of cool, exciting things. But right now, I still can't see what competitive advantage they have. They have the best batteries. They have the funnest user experience. They also have the best AI. What do the legacy auto manufacturers offer other than their legacy name? I think their brand names have been a benefit for a majority of their lifetimes. Toyota has always been about dependability, but nowadays Toyota has been more in line with dinosaur type thinking. I think their brands are starting to become a hindrance, and I think a lot of them are in a lot of trouble once people realize what Tesla has achieved, and I think most people still don't understand that yet. So the more fear and uncertainty and doubt you see around Tesla, that's more buying opportunity in my opinion. But that's all I have for today. Let me know what you think. Are you invested in Tesla? Do you think its price right now is reasonable, still too high? Let me know your thoughts. This is Green Knight Trading, where Squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.